we've made targeted trade-offs around decentralization and like what is the level we need to get to hit the performance we want, and like how can we make that as decentralized as possible without compromising these minimum requirements we need.
Hey everyone, I'm Mikhail. Through my work in Web3 security and as the founder of Network Spotlight Community, I get to talk to some of the most ambitious builders in crypto. Today's guest is Doug Colquitt, core contributor of FOGO, a chain that's going all in on trading performance to challenge Solana and Hyperliquid. If you're building in Web3 or just want to see where the industry is headed, you're in the right place. Let's dive in. Doug, so most chains copy Ethereum. You hear about EVM chains all the time, but you chose to try to beat Solana at its own game. What was the reason why you decided to go the SVM route?
The biggest reason is that FOGO is a trading-based chain, and then we'll have other applications, but like at its core, it's a chain focused on trading. And I think anyone who's kind of looked at kind of EVM versus SVM in the past 2 years or so, is kind of undeniable that most actual trading happens on Solana today. So I think the SVM has just kind of done a better job of building that kind of trading ecosystem. EVM does a good job of kind of building, not moving assets, but like holding assets, restaking, kind of looping, yield farming, all that stuff. I think the EVM still does well on, but like at FOGO, we really want to focus on trading and very active markets. And it's kind of undeniable that like right now the SVM is just better at that, and in general more scalable. So like to actually capture meaningful percent of TradFi activity is going to take an enormous amount of scale, and just EVM, even on the high throughput, L2s and other things, it's just nowhere near kind of the level of optimization that you get out of the SVM, especially when you combine it with kind of using the Firedancer client and focusing on that specifically.
And I do want to ask you about Firedancer, but what made you decide to build FOGO and not just build on top of Solana?
Yeah, that's a great question. So we had from my first project Ambient, we had been in the EVM world as a spot AMM, and we were kind of looking at how do we get where actually the trading activity is happening, and I think like two things were: number one, Solana, where things were happening, and at around the same time, like Hyperliquid had started picking up a lot, and I think kind of perps were undeniable that it was there, and Solana just didn't have a competitive offering there. And one reason for that is a chain designed with trading in mind just has a lot of natural advantages over even Solana. It's a high performance chain, but it's a very general purpose chain. And so when you are trying to support a very high throughput, very active trading ecosystem, if you don't have deep integration at the chain level between the major trading applications, there's just a lot of things that kind of break. So basic thing, like for example, on Solana, if is a lot of market volatility, it's very difficult to land transactions. Which means, right, for market makers, it's very difficult to adjust their quotes when they need to the most often, and right, because of that, they're less willing to provide liquidity. Another thing, right, like being market makers, aren't certain types of transactions on a trading chain can be prioritized. So, for example, and this is one thing Hyperliquid does, is one thing we'll do as well, is we prioritize market makers adjusting their quotes relative to takers coming in and moving things. And that's kind of a microstructure nerd way of saying is that you're filtering out a lot of people, and in a general purpose chain, you have kind of a lot of people who come in and take advantage of the fact that the chain doesn't have this low level support for trading. And what ends up happening is that the market makers and liquidity providers lose money, which at the end of the day means that the end users who access that liquidity end up having to pay more and have less reliable liquidity. So the problem with Solana itself is that it's not designed to be, it's not designed for these kind of integrations with the trading systems that the trading applications that you really need to kind of make the marketplace work. And I think that's kind of reflected in the fact that you just don't see a major perp application kind of break out on Solana.
It's interesting. When I first scheduled this call, one of the things that I thought about was we're going to have this conversation how FOGO is going after Solana, but just hearing you talk for the first 5, 10 minutes, it sounds like the real competition here is more of going after Hyperliquid.
Yeah, I think we think of both of them as our competitors. Obviously, a lot of respect for both, and like Hyperliquid has done a fantastic job. I think it's hard to deny from the trading side that like today, it's most of the activity is probably moved on-chain. Trading activity is taking place at Hyperliquid. Of course, like the meme coin trenches are still fairly active, and Solana dominates on that. But perps, there's no question, right? Like Hyperliquid has kind of run away with it, and to a lot of to a certain extent, right? We do have some similarities with them. Like Hyperliquid, we're co-located chain. Like Hyperliquid, we have a smaller validator set, so we make trade-offs, not only to support trading, but kind of to increase the level of performance needed for trading, to the extent that is really hard to get even on a Solana type blockchain without kind of those optimizations. So that's one aspect. I think we are kind of similar to them. Another aspect is obviously we're focusing on like perps as kind of one of the major, if not the major use case of on-chain trading. But that being said, right, we're still, even though we support trading, we still have general purpose SVM block space. And I think kind of one of the interesting things is that 1+1 is more than 2 here. Having a great on-chain DEX and on-chain liquidity and on-chain trading is fantastic. And having general purpose block space is good. But when you combine those two, it's actually kind of solves a big problem you have in crypto where block space has kind of become commoditized. So you have a bunch of chains out there, and like a lot of the block space isn't really differentiated. When you put that block space next to that general purpose block space next to like a very liquid, trading venue with a lot of actual organic flow, it kind of makes that block space more valuable, makes the L1 itself more valuable. So Hyperliquid's doing this with the Hyper EVM and stuff. We think at FOGO, actually, the integrations are deeper because the perp decks and all the liquidity is just naturally inside the SVM instead of being kind of these two different environments that can interact, but there are frictions between them, and kind of just focusing on making the general purpose side of the chain as scalable as possible. So yeah, I'd say it's definitely, we think about both quite a bit.
You mentioned Firedancer, and I know a lot of Solana developers are really excited about Firedancer. And for me, I'm not as technical, but from what I understand, it's just a great way to onboard traditional developers. And so you kind of expand and make it easier for gaming and amongst other things. But for you and what you're building, why is Firedancer so exciting for an everyday user?
Yeah, so Firedancer is just to give some context, some basic context is, any chain has either one or more clients. So you have the protocol itself, which is a set of rules, and then clients, which is actually the software to participate in the chain. And certain chains tend to just do one client. For example, actually Bitcoin, almost all of it is just run on one client. Other chains like Ethereum really value client diversity. So like the Ethereum Foundation, a lot of the money they spend is just supporting these smaller clients. Solana started off with one client, what is now Agave. It was just kind of considered the Solana Labs client before. It started out with one client, and then at one point Solana realized that it wanted some diversity in clients. Number two, wanted to see how much they could juice performance. So Firedancer originally came along or it did come along from a collaboration between the Solana Foundation and Jump, the large trading firm that has been very active in crypto. And kind of Jump as an HFT shop has a lot of in their DNA, kind of performance and low latency and everything is just there. Like they have a lot of experience at that. So they've built this client from the ground up to take Solana and make it, much faster than even kind of the speed and performance people are used to. So that's great. Like they have this new client, and it's it's out there, and its performance is fantastic. The problem with that, though, in the Solana context, is a chain can only go as fast as the slowest client. Because if this client over here, Firedancer, is much faster than Agave, what will happen is either Firedancer has to slow down so Agave can keep up, or vice versa. Firedancer can go a lot faster, but these other nodes will fall behind, and then the network will have all kinds of issues. So it's a lot like buying a Ferrari and only driving it in New York City traffic. Right? You can only go as fast as the traffic you're in. So for FOGO, what we've done is kind of taken an opinionated approach to we're going to build the chain from the ground up, just using Firedancer based clients, and to kind of get that performance, so they don't have to worry about any kind of legacy systems, just kind of slowing things down. So we're able to kind of reap this performance in a way that even Solana isn't, and a lot of that is just because, right, when you have a new chain, you're not coming in with kind of all this technical debt ahead of time.
So it sounds like what you're saying is you chose Firedancer solely because it's a lot faster, and so from a
The
user
performance
experience,
is faster.
yeah.
You more scalable. We've also just made certain trade-offs, like the requirements to be a validator. You need larger machines. We do fewer validators, and just because Solana is doing, say, 3,000 transactions per second right now, which is fantastic from a blockchain perspective. The kind of level that you would need to, actually be NASDAQ is orders of magnitude higher than that. So just from the start, like even Solana level performance is kind of not up to the level that, like, kind of we're hoping to hit. So you have to start with the fastest, most performant thing out of the gate, rather than kind of starting with slower stuff.
So yeah, as you mentioned, so you started with a curated validator set. Some would say that's a step towards centralization. What was the biggest reason why you decided to take that route, and how do you balance speed, decentralization? How do you juggle all that?
Yeah, that's a great question. So, like, we've made targeted trade-offs around decentralization against performance, and kind of what we call it as minimal viable decentralization, and like what is the level we need to get to hit the performance we want, and like how can we make that as decentralized as possible without compromising kind of these minimum requirements we need for trading. So one thing is obviously the curated validator set, and the way that basically works is that any validator, two-thirds of the validator set, to join the validator set, or to leave the validators, or to join the validator set, you need to be approved by two-thirds of the set, and also the same thing, a supermajority can kick a misbehaving validator. And one of the reasons for that is oftentimes in blockchains, you see this tension where what is kind of good for the network. Well, right, because a blockchain, a proof of stake chain, at any given time, a block is produced by one leader. What is selfishly good for that leader may be very bad for the network. So simple examples like sandwich attacks. So like everyone's, like, I'm sure, very familiar with the concept of where someone gets sandwiched and they set their slippage too high, and they lost all their money because some mevbot came in and kind of attacked them, and took their money. That's terrible for the chain, right? Like, that's a horrible customer experience. For the validator, though, yeah, they can make a lot of money doing that. So you have this kind of tragedy of the commons issue, and this is one reason I think L2s have been getting more competitive, is with a single sequencer. Like, for example, Base, obviously that's run by Coinbase. They're kind of aligned I mean, they are aligned, so they don't have the incentive to kind of cheat the same way that a fully open validator set does. So this is kind of a route that we've taken. How can we do it on the L1? And how can we kind of police abusive behavior by validators at kind of the social layer? So it is still like a general purpose protocol. Validators can vote technically in any proof of stake chain. If two-thirds of the validators decide to, never vote on blocks from a misbehaving validator, they could. We're just kind of adding this functionality here to make the whole process a little more transparent. So it is a trade-off there. I don't think it's as large a trade-off as people say, especially if you're already a proof of stake chain. For example, Solana. This happened before where there was some people doing sandwich attacks, and then the Solana Foundation removed some of the delegation, and there is kind of some social level policing and on every chain. And I think we're just trying to be transparent and include facilities for it. So that's one thing. The other kind of place where we've made a trade-off is we have this concept of multi-local consensus. And so the problem with a fully global network is you're bound by the speed of light, and to you send a message from New York to Australia is there's just an intrinsic latency to that. Doesn't matter how great your software is. There's about 100 milliseconds. It's going to take that long, so you have to send a message there. You have to send a message back. This is the reason Solana block times are about 400 milliseconds, and they can't really get much shorter than that. The problem is 400 milliseconds seems pretty fast, but from a trading perspective, it's pretty slow actually. It's when TradFi exchanges, a lot of things happen on the level of microseconds, if not nanoseconds. So like we do need kind of lower latency than that. In addition, a lot of TradFi institutions are used to kind of this concept of co-location where I know where the trading's happening. I can put my servers closer. I have not only a faster trading, but I have very consistent. I know how long it will take my trades to get there. The consistency is very important. So we have co-location built into the network, meaning that at any given time, FOGO consensus is in a single data center. And this is actually the way Hyperliquid works as well. All the nodes are in a single data center. But one difference we have is that the multi-part of multi-local means that a consensus, the network can move from data center to data center very easily within like a very short period. So you kind of get some robustness on decentralization there, where if a data center fails, or even if there's a a jurisdictional issue, if you're in Japan and the Japanese authorities decide that they don't like support this, or you can move very easily to New York or Argentina or wherever, right? So the validators decide where things occur, and you can even fall back to global consensus, like in the worst case. So we think, right, like there is some trade-off here, but we're trying to be like intelligent about keeping a decentralization at a level, especially like in adverse type events.
It's got to be so challenging as a founder, always trying to juggle decentralization, privacy versus user experience. And what the market has told us up to this point, I don't want any hate from Cardano community out there. I think it's great technology, but they're moving a little bit slower, right, than some of this other technology like Hyperliquid, like Solana. And a lot of it has to do with because they're trying to maintain that level of decentralization. And so sometimes, that kind of stumps you a little bit. And so trying to decide how much centralization versus decentralization, user experience, and ultimately what the market wants. And by market, we're looking at TradFi coming in. It's got to be very tough to juggle all that. So this is more of a personal question to you, Doug. I mean, what do you fear most here? Is it being wrong about the technology or about the market?
Mm, that's a good question. I would say the being wrong about the market is definitely the technology is technology, and it will change a lot. But if you don't really have a fit with what the market needs, you can have the best technology in the world. And if the market doesn't want it, it's not gonna not gonna buy it. Buy your product. So definitely, I think the market side of that. Obviously, there are a lot of things that are not great technology that really fit a market need and still are successful. But yeah, to your point, it is tough. Like, what level of decentralization does the market ultimately demand? And it's tough because there's different levels of this. There's the average on-chain retail degen, and he has his own requirements, and then you go all the way up to banks or institutions. And they have compliance departments, and those compliance departments probably have their own checklists. And now we're getting legislation where this is what defines a decentralized network or a blockchain. And so you might have something where a certain level of decentralization meets the market where it's at right now. But ultimately, things might change, right? Like legislation could be passed, newer entrants could come in with different requirements. You might find yourself kind of on the wrong side of that. So that's tough to predict. I think one thing at FOGO is we're generally have an ethos of being practical over kind of being maximally ideological in any direction. So I think we have a pretty good team and kind of have a pretty good sense of where do we make the trade-offs and kind of where the market is. And obviously the team has a lot of TradFi background, so we're constantly kind of talking to people from different areas to see where the puck's going.
And you mentioned a pretty diverse group of traders. So there's meme coin traders, and you've got folks that are coming from TradFi. And right now, the sentiment in the market is more on the TradFi side because you've got all the noise around stable coins, and you've got all these companies that are listed in Nasdaq that are putting crypto in their treasury. And it started with Bitcoin, but now we're talking about Tron, Solana, and all these other altcoins. So when you think about FOGO, where in that spectrum do you feel like you fit in? Is it more on the meme coin side or is it more on the TradFi side?
Yeah, I mean that's a great question. I don't know if we think of it as much of a dichotomy. To be honest, we actually I think there's an ecosystem balancing act here. So institutions don't necessarily want to trade with each other all day long without any retail there, like Jump and Citadel, right? They don't want to trade against each other. They want to trade against ordinary people, which is why, they go out and have deals with Robinhood and all these other places. So I think the most successful ecosystems will actually bring in both groups. You need the retail order flow there just to kind of make the market work. That's kind of the lifeblood of any market are just ordinary traders. Institutions are there to serve them and to provide liquidity and to kind of provide very stable, well-priced liquidity. So you want those as well. But I think, right, if you don't have like retail, and those could be TradFi retail trade. It might be Robinhood, it might be on-chain people, but you do need to start with some level of retail traders. I think one problem with a lot of institutional focused trading venues, maybe it doesn't apply to like certain other things like stable coins or loans, but for trading, you have to figure out some way to source retail traders. And that's kind of what we wake up thinking about, like where are the retail traders going to come from?
I don't want to be like a pessimist, but it's almost like institutions need somebody to dump on, right? I mean, that's kind of what it is,
I
right?
I mean, look, institutions. I guess to put it, yeah. Look, institutions are there to make very consistent money. They're not there to take big bets, right? Like nobody's investing money in Citadels for Citadel to go out and go YOLO long Bitcoin or whatever, right? They want kind of very consistent returns. And for that to happen, right, they're just there to make a little bit of money on each trade. The flip side is like retail is they can kind of take bigger bets. They can kind of take more risky bets. So obviously, if you're buying in like your 401k or for retirement, you can hold a very long time. So there's things retail can do that institutions can't really do. But the flip side of that is like on a very small time scale, like on a 1 second time scale or whatever, you see a retail trade. Yeah, retail almost always loses on a short time horizon, and so to make up for that, right? Like you're either holding longer, you're kind of taking more concentrated bets, you're in things earlier. But yeah, a lot of times if you're trying to scalp or trade, right, it's a very uphill battle for the average retail person trader.
D Doug, as you're building out Fogo, you obviously have a finger on the pulse in terms of what TradFi is doing and also in crypto. What are some of the things that you're hearing about that may not necessarily be making the news, but is really exciting in terms of what's ahead?
I mean, I think in general, we are seeing stuff built around PerpFi, like what we call PerpFi stuff, and this is the first time, especially with Hyperliquid, that we've ever really had very liquid organic markets on chain. We've had AMMs for a while, but I think kind of, an open secret about them is that the vast majority of like order flow and volume was just arbitrage bots, and I don't know how many people are actually trading on them. So now that we actually have like real order flow, on chain, there's just a lot of cool composable products that are being built on top of that. So like for example, a famous like kind of trade in like hedge fund world is the spot perp basis, and you perps pay a certain funding fee and you can collect that and hedge with spot. That's traditionally something that's only been available to hedge funds. Now for the first time, we're actually seeing like protocols or DeFi applications doing that. And so instead of, actually a hedge fund going out and doing that, you just deposit into a vault, and that's open to anyone. Obviously, that's a lot more accessible for the average person. I think we're going to see a lot of interesting things where stuff that was previously only kind of available to institutions or sophisticated traders will kind of open up in this kind of DeFi space now that we actually have real markets on chain.
Perfect. Yeah. Well, I appreciate you answering my questions, and some of them may have been a little bit more of a curveball, but
No,
this
they're
was really
great.
educational for me, and I'm sure for the audience. Where can people follow along if they want to learn more about FOGO? What would be the best way to go about it?
Yeah, I'd recommend following our Twitter at FOGO Chain, all one word or all one word, FOGO Chain. We'll go there. You have a link to our Discord. We have a kind of a really fun community building up. We'll have public testnet in July, and then mainnet by the end of Q3. So
Wow.
exciting stuff
Well,
happening.
it'll be here before you know it. Doug, thanks so much for hopping on. This was a real pleasure. And for those that are watching, please give FOGO a follow and check out networkspotlight.io for connecting with Web3 founders. Subscribe to the channel, like the video, and we'll catch you all on the next one. If you're a founder or operator in Web3 and want to connect with others like you, head on over to networkspotlight.io and apply to become a member. See you on the inside.